TMT Stock Market Strategy video special edition on gold. And as we all know, gold has been on fire of late, and everybody is mentioning it on CNBC and Bloomberg, and the stock boys that are stocking the shelves at ShopRite and AMP are saying to buy gold. Does that tell you that there's a market top? Probably, most likely, yes. There is a market top in gold, and I would say in the short term, and I mean extremely short term, guys, within a couple of weeks or so. I like gold. I like gold for the long term, absolutely. But I don't think that gold should be bought at these levels. I think you should wait for a pullback. And we did get a pullback yesterday. But I just want you to be aware that we don't want to be chasing any type of commodity that has gone up almost 100% as far as the GDX is concerned. And, gold's up 250 from the lows of January. So you got to be very careful, okay? And why? Well, here's the culprit. Here's the UUP ETF. And as you can see here, we had a big bullish fallen wedge, which broke down. And that's from the Janet Yellen comments and the ECB Mario Draghi comments. Hawkish comments, dovish comments actually just really killed gold. You see the big spike in volume. I do believe that this should start to get back into the flag and even actually, the wedge, and actually start to break higher. How high does it go? Does it go back to this area? Probably not, but I do suspect that we're going to get a little bit of a short-term rally as we are quite stretched to the downside in the dollar, which will inversely correlate to downside pressure in commodities, okay? So keep that in mind, guys. Also, when I want to show you why I think that we might have a short-term top is the commercial, the COT report. And this is brought to you by, this chart is by the COTPriceCharts.com. Excellent, excellent charts, and they also have it in every other asset class. Take a look. Great charts. It makes it real easy to digest the COT report. And as you can see, the large speculators, which are the managed money, the hedge funds, what have you, are extremely long at the top. And the hedging producers, commercial guys, are extremely bearish and have been bearish for quite some time. That, when you see an extreme of positioning at these levels, more than likely the commercials will win and they will actually get this market to go down. Now, you have to use caution when you see that. Now, is it a timing thing? No, but you have to say, be aware that, well, do I want to really buy gold at these areas when the smart money is shorting gold? Because they're hedging their bets on them, on any gold that comes out of their ground. They're thinking that, well, you know what, I think 1300, 1290 in that area is going to be it for some time. So they're hedging their bets of what they're taking out of the ground. And to me, I'm going to follow the producers. I'm going to follow these guys. Now, the speculators, which actually trend, is also very good when you get the part of the move like here, right? When you see them starting to add positions, this is when you want to start looking at gold to trend. You can trend because most of the commercials are always short anyway. But when you get to these extremes where they're short and long at the same time, these commercials are always going to win. They're always going to win, guys, all right? So I just want you to be aware of that moving forward, okay? Another thing is the bullish percent gold miners index. Extremely stretched at 82%. You could see that here, okay? You have to use caution when you get up. This is based on a point and figure chart, very reliable. So when you get to these areas, we're here at 45.50. We see the GDX start to sell off. We're at 82% now. So logical move for a pullback in the miners, the GDX, the GLDs, the nuggets, and of course the push higher in dust, which is the inverse, okay? Now let's take a look at the Huey index, okay? This is the gold bugs index, the Huey, and you can see this is the weekly chart. What do you see here? We have the 200-week moving average sitting right above it, above yesterday's high. So you got resistance on the weekly chart in the Huey, and you got to be careful. You just have to be careful here, and this is not the place to be buying gold, okay? Now, do you short gold here? You can. As long as you have a strategy in place and protective stops, you will be able to short gold itself. But again, gold weekly, I want to show you this. Now, I'm going to show you the monthly chart as well. You can see the gold weekly sitting right here. And let me just blow this up just a little bit more. At 1323 is a 200-week moving average. Again, so you got some big resistance up here, guys, okay? So this is something that you guys need to be aware of if you're looking to trade gold. And to the long side. I'm not saying that gold is not going to go back up. I'm saying is on a temporary basis, gold is extended and needs a rest and a pullback before I would enter any long positions. Now, this is what I use to see what I like for bull and bear markets in the commodities. I like to use the 8, the 20, the 50, and the 200. Very common, right? But if you see here, this is where we had the crossover of the 8 and 20 month. Now, this is the monthly. We had an 8 and 20 cross to the upside. That started the bull run in '02. Okay, and look at what happened, guys. All the way up, never crossed until 2011. In 2011, when we peaked at 19 and change, we ended up late 2012. So, apologize. We crossed that 8 and 20, did cross right here. That created that bear market in gold. And now, gold, and let me get out of this, gold here is about to cross again to the upside. And it's right here. Let me just open that up for you guys. Get rid of that. And you can see gold is now starting to cross over. Started a new month. And I do believe that once we get a nice little pullback, okay, to the 1180, 1160 to 1180-ish in gold, that's what I'm looking for. I'm going to start nibbling in long. Do we trade gold to the short side? Absolutely. You want to take advantage of that, and that's something that I'm going to show you now. Here's the GDX, and you can see quite stretched, quick. This thing has doubled since January. It is now at $25, so it is actually gone over 100%. Would you want to be involved in a move outside of a Bollinger Band? And we have a major engulfing red candle. So we have a red candle here that has now is offering a sell signal. Now, to me, how I'm trading this is it needs to take out the low of this candle. That's yesterday's low. You could easily look it up, and let me just get that for you guys right here. And yesterday's low will come in at 25. Just round it off to 25 bucks. And $25, we want to see the GDX break down and start the trend lower. And the first thing that I'm going to anticipate is the first gap fill, which would come in here. Okay, that's going to be the first gap fill, and then the second gap fill here. You can see how far away we're stretched from the 20 and the 8, as a matter of fact. So let me just get rid of these things. You can see here we have the 8 sitting at 23.70 and the 20 sitting at 22.83. So it needs to come back. It's the call. It's normal. It's healthy. It's revision to the mean. Okay. Let's take a look now at the GLD, and you can see very similar. We're into some heavy resistance here, into this resistance band. And if I open up the chart, you'll see what I'm talking about. Gold has now broken outside of the Bollinger Band and now came in, and it's going to need to retest itself. Even if it came back down to 115, 116 in the GLD, I think that's a good and logical spot. Good support here, as you can see, was resistance, now support. So if it did come down here, I think it would be wise for it to start looking to look for some buy entries. But as of right now, I think gold is a better short than a buy in the short term, and I mean in the extreme short term. Matter of fact, let me just show you. Let me show you one other thing. Let me show you Nugget, NUGT, because I got a couple of calls on Nugget. Now, Nugget, to me, if I look at Nugget, how extreme this is, we had a 2-day move from 90 to, believe it or not, in the pre-market was trading at $129, guys. Why on earth would anybody want to be buying Nugget at $129 in the pre-market? Okay, do not chase. There's no reason to chase these things. They will come back. My first target, and like I said, I got a bunch of people asking me, is going to be the gap fill. Why? Because Nugget usually fills the gap, right? Repetitive patterns. Let's take a look. You could see it here. Excuse me, where was it? Right here. Here's the first gap fill. Here's the second gap fill. And if you looked here, gap fill, you can see that here, gap fill, and here, gap fill, okay? So here it is to the upside, and here it is to the downside. So you can see easily that Nugget likes to fill the gaps, okay? So this is something here, 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 and then we got one here, and then we got one here, okay? And now I'm looking for a gap fill here, and then I'm looking for a gap fill here, which would coincide nicely with that 20-day. And that's where something, once we get back down and see where we go, maybe chop around, create a sideways horizontal trend line, and then break back up, then maybe you want to start looking to buy, but not at $125 at 114, 115. All right, so I hope it helps. Again, quick recap. I think gold goes down on the short term, in a very short term, couple of weeks, maybe chops around, has a scary day or so, but then that is an opportunity to buy gold for the longer term picture. Okay. Hope it helps, guys, and we'll talk to you soon. Take care.